So if you look out there, potential trade war, geopolitical risks, rising interest rates, inflation, is that number one for you in terms of risk to this bull market?
Absolutely. I actually think that inflation is the mother of all risks here because we've been waiting for inflation literally for the last 9 years since the recession ended in 2009. And you could ask the question, well, why now? We didn't see inflation for the last few years, so what's different today?
Yep.
Well, what's different today is that the dollar is falling, and remember when the dollar goes down, inflation goes up. We had a huge fiscal expansion, and remember fiscal expansion is pushing the economy towards overheating, which also creates inflation. And we also have the discussion of trade wars and tariffs, which also, although it may be modest, but it's also putting upward pressure on prices and therefore on inflation. So combining that with the starting point of where the economy is, namely very close to full employment with the unemployment rate at 4.1%, we do think that the risks now are rising, that there will be more upward pressure on inflation over the coming months.
So important for you to clarify here, do you mean rising inflation like the healthy kind that we want to see in a good economy, or are you talking about something a little more worrisome, a spike in inflation that would have to cause the Fed to react more quickly?
That's a really good question, Sarah. I mean, remember the most important point here is that the Fed has an inflation target of 2%. And the critical thing becomes, where are we relative to that target? And if you look at the latest data for core CPI, that is now 2.1. And if you look at the latest estimate for what core PCE will be in March, at least according to the Fed, that will now go up to 1.9. So we are dangerously close to 2. And as that trend continues to move higher, there were some technical reasons for wireless phone services did drag inflation down for the last 12 months. But now that's behind us. And combined with the list of worries that we have that I just spoke about at a macro level, we do think that we're about to break through 2. And the consensus doesn't expect a breakthrough on the upside to 2. And that will get the Fed vindicated and justified that they are saying we should be raising rates. So this is in some sense, to your question, this is actually the bad inflation, that we are seeing inflation go through the target of 2.0. And that is why we're getting more worried.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.